Good morning, everyone. Thank you for joining us this morning for another Clue webinar. General housekeeping to kick off. This webinar will be recorded and posted online for the benefit of people who can't join us today. But let's get straight into it. This is a very important one, especially with the recent announcements from the government. I'm sure you're all aware, but just to, I guess, kick it off, everyone is now aware that the government is banning borrowing for the purpose of purchasing residential property in an SMSF. So the good news is that the government is not banning the borrowing within an SMSF for the purpose of purchasing commercial property. So let's get into it. What is SMSF lending? Well, it's basically limited recourse borrowings. So the limited recourse borrowing arrangement, or LRBA, as you've probably heard of it. It's basically where the SMSF is borrowing, but there's a certain mechanism by which it does that, and we'll get into that in the next slide. But what it's for is usually to be able to purchase property and fund the purchase of the same. It used to be residential, not anymore. Now it's commercial. We do have a slight window to be able to still fund the purchase of residential property. Our understanding, excuse me, is that we've got up until the 10th of August before the changes kick in. And what we're seeing now is that lenders are starting to pull back, where they're no longer funding or accepting applications for approvals in principle to purchase residential property in SMSFs. So they're pulling that back. They're prioritizing signed contracts, and your signed contract apparently needs to have a date prior to the 10th of August for the lender to be able to accept your application for borrowing a residential property. For borrowing for the purpose of residential property purchases. Having said that, commercial property unaffected, and to be fair, we predominantly see SMSFs buying commercial property, and the reason for that is investors are more keen on a higher yield, which commercial property usually provides for. But more increasingly, we're seeing self-employed clients of ours purchasing properties to trade from. And whilst you can't buy, say, for example, a residential property in an SMSF and occupy it yourself, you can buy a commercial property where your business is occupying it, because that's deemed to be arm's length. So, like we said, borrowing for residential purposes is being banned by the government. Commercial property borrowings is unaffected at this point. Now, so how does it work? So basically, the way it works is, like we said, the SMSF is going to own the property, but it needs to have a bare trust set up to actually hold the property. And that bare trust needs to have a corporate trustee, and the corporate trustee is what goes on the title. So what we mean by limited recourse borrowings is the lender will lend you or your client to purchase a property, but they do not have full reign over the assets of the SMSF. They are limited, their recourse is limited to the property that they're funding.
Which is where the bare trust comes in.
Correct. So what this then leads to is your limited recourse is obviously just the property that you're purchasing that is being used as security. They don't have free reign. An SMSF might own shares, it might own other property. They only have access to the property that's being utilised as security that they're funding. So in terms of how lenders will look at servicing, they're only looking at the rental income that is from the proposed property. And that could be rental income from a third-party tenant or from your business if your business is paying rent to your super fund, as well as the super contributions. And they may be the discretionary contributions that you make up to a certain level, or the SGC contributions.
Just on that as well. It's for that reason the majority of the lending we have done here at Clue is around that commercial asset, primarily because the income that's coming through that asset, that commercial property, is much better in terms of an annual yield than, say, a residential asset. And when you're looking at interest rates that are generally sitting at that sort of 6 to 8%, for example, if your yield is below that, well, then clearly it's going to create a little bit of a shortfall. So with residential yield sitting sort of 2.5%, 3%, for example, here in Melbourne, there's a fairly big gap there to make that stack up. So you either have to tip in more cash and deleverage the the asset in order to make it work, or you have to have some sort of other income stream, which once again, you're pretty capped with super funds. You've got the contributions and then potentially any other assets or shares within the fund that might be generating annual income. But for that very reason, typically speaking, we've seen commercial transactions stack up a lot better.
So the property types funded for SMSFs, well, as we said, it's going forward only going to be commercial property that can be funded. Residential property can't. That's not to say though that an SMSF can't own residential property. It still can own residential property, but the SMSF will have to pay for that in its entirety, so 100% of costs. Having said that though, like I said before, we normally see people purchasing commercial property in SMSFs anyway. That's a vast majority of what we see, and they're purchasing any type of commercial property, really, as long as it's improved and it has something that you can rent out. Warehouses, offices, shops, retail, etc. Childcare centres, aged care as well. Even special purpose property like petrol stations, for example, might be able to be purchased and funded through that. LVRs might differ though. What's not allowed, like we said before, personal holiday homes, owner-occupied residences. You can't do major renovations and construction via debt in SMSFs. Lenders won't fund that. They're working within a very rigid framework within the SIS Act. And another thing that you might be thinking can be funded but probably can't be is your old man cave. Although it's a commercial property, if it's for personal use, it can't be funded for.
Yeah, so if you're wondering, those commercial factories that see in Dandenong South here in Victoria, for example, or something like that, they're not overly big, but people are housing boats in them, or storing cars or whatever. Because it's for personal use, it doesn't really meet the requirements under the SIS Act or for self-managed super fund borrowing arrangements. If it was being purchased for a third-party tenant that was going to use it and use it for business, totally different. But when you're using it for yourself, in this example, regardless of whether it's a commercial factory, it actually will not meet the requirements. So once again, make sure you're ticking all the boxes with your advisors around whether the asset is suitable or not and is going to meet the SIS Act requirements. Once again, we're not here to give that advice, but we obviously well across it. But yeah, really important. If you're buying a man cave, as the way put it, probably not going to meet the sniff test, so to speak.
Another thing to be mindful of is the principle of single acquirable asset. Do you want to explain what that is, Eamon?
Yeah, so simple example there. And for those of you who don't or aren't aware, with the LRBAs, you have a requirement there that it has to be a single acquirable asset. What that means is like single title for the asset that you're buying. So what we have often seen is if you're buying a commercial property, let's say it's a large building, but outside it has multiple car parks, and those car parks happen to be on a separate title, each of them, that effectively does not meet the single acquirable asset. So you might be asking yourself, can we still do that? Yes, you can. It's all a matter of how you fund it. And what I mean by that is there's a few things to consider. One is the contract, working out what is the overall price of what you're buying, and then also divvying that up based on the actual allocation of that contract to the main building versus what the cost of each car park is. So that's something you need to be mindful of. And then if you are looking to leverage and obviously borrow funds to acquire it, majority of the funding will be focused on the main asset. And usually what will happen is any contribution you're providing to this overall transaction, those surplus funds or the contribution funds that you're providing will probably cover the car parks in pure cash, and you'll use the funding to buy the overall building. Now, you can also look to leverage against the car parks, but you would need, as we discussed, separate bear trusts for each title or each asset, as we call it, to be able to leverage. So to be honest, that can be a little bit painful. And what we have seen typically is people just use their contributions to buy the car parks in full and just borrow against the main building. But once again, something to be mindful of, and something that's important to guide your clients on, or Clue can certainly do that, and something that needs to be managed upfront rather than being caught out at the end.
So who is this suitable for? Well, if you've got several self-employed clients on your book, or if you've got investors that may be invested in a whole lot of residential property and now individually, and now they want to build their SMSF up. Those clients are the clients that you would be talking to about their next move. And if they are already in talks with their financial advisor, then the SMSF piece might be the next piece in their strategy. And they may be looking at buying, a commercial property. Like we said, if they're a self-employed person, they'd rather pay the rent to themselves or their future selves and build their wealth through their SMSF. And the investors might have been, capped out in terms of all the tax benefits in their individual names or company names, and now they're looking for new or more beneficial tax treatment. Again, this is something that would be advised by their advisor, but for you, just keep an eye out for clients that fit this description or within this demographic. We're typically looking at clients when they approach us or their advisors approach us to help them with these moves, clients with at least 250,000 in their super fund. That seems to be the magic number to start thinking about purchasing a property or funding a property in a super fund. But again, it is really important that we're not providing any of this financial advice. We're specifically providing the lending advice. So you need to ensure that your clients have received the right financial advice to take this next step into their self-managed super fund.
And just before you move to the next slide, that piece around the contribution or the fund balance of sort of 250, I mean, that's a very rough guide, guys. So one thing to be mindful of, and lenders are probably being a little bit strict on this now, is they really don't want to see the borrower use all of their existing funds in the super fund to buy the property. So what I mean by that is, if they've got a balance of 250 and they require all of those funds as their contribution above and beyond the borrowing amount, it leaves nothing in the fund from day one when they settle. Most lenders aren't overly keen to do that. They want to have a bit of a buffer. So they want some liquid funds left in the account after the settlement has been completed, just to make sure that they're not leaving the client in a tricky situation if for some reason there's either delay in rent, or if it was a vacant possession waiting for a tenant to come in, or if there's some renovation requirements that are required on the building and they have no other funds to rectify those things. They just don't want to leave the client short. So bear that in mind. 250 is a guide, but you definitely want to have some surplus funds after you complete the transaction.
That's a really good point. Now, which lenders are playing in this space? The major banks are pretty much all out, and they have been out of this space for many years now. They stopped lending to super funds. We do hear of some anecdotes where one or two of the major banks are playing in this space, but for very particular scenarios and potentially only high net worth clients.
Yeah, for example, there's one lender that your client needs to have net assets, last time we checked, of at least $5 million in their super fund.
Yeah, and that's not going to be the majority of the market. Correct, yeah. So really, this space is being dominated by the non-banks for several years. They do it really well. They've got specific policies for SMSFs. They all have their slight take on it, and they may differ in pricing, LVRs, or liquidity requirements, etc. But they do fill the gap that the big banks have left in this space. Some are coming back into it after a long hiatus, but really this space is a non-bank space. So for the case study, what we typically see, like I mentioned before, your predominant scenario that's going to come across your desk, especially if you've got self-employed clients, is the business owner looking to purchase their trading premises via their super fund to have a nest egg that they can pay rent to over their working career and then retire on. And this serves two purposes. Number one is to shore up their business in terms of premises security. They no longer have to worry about their landlord kicking them out or having to change premises because their landlord's upping the rent to by a substantial amount. But they also shoring up their passive income in retirement, potentially being able to sell the business and have a third-party tenant occupy that space. This is a predominant scenario that we see, and it's probably one that you'll come across more and more if you've got self-employed clients. Now, how do you spot these opportunities? Well, it's really just about listening to what your clients are telling you, especially like we said, those self-employed clients or those investors. And some of those discussions might start around, can I buy a property through my super? That's a very common one. or we're setting up an SMSF, or I want my business to pay rent to my super. Other times you'll be speaking to them and they'll tell you that they've had chats with their accountant or their financial advisor and that they've suggested they set up an SMSF. Other times they might come to you telling them that their bank has knocked them back. If they've got a direct relationship with the bank, they might have already asked that question. So all these gate opener questions are probably a really good sign that you can step in and find an opportunity within your own client base. So how we support you? Well, guys, we've spoken about this quite extensively. All you need to do is flick the referral through the client Clue Partner Portal. We will jump onto it, and you can put in as much or as little information as you've got. All we need to get started is a name, number, email, and a brief description on what your client wants to do. We take it on from fact find to settlement. You keep the relationship. We will do as much or as little communication as you want, but we will keep you informed along the way through every single milestone. All you need to do is log onto the portal and you'll see exactly where your deal sits in real time.
And just on that, our team's equipped to understand these transactions. So we've done plenty of them. We understand the space. Many clients, may be looking at this for the first time, and there's so many things that can trip them up. It's not just securing the loan. That is the tough thing. It's actually all the other things around it. It's all the peripheral. So it's really understanding this space, like we've sort of covered off before, the single acquirable asset, for example. Most people getting into it that haven't dealt with it before have no idea what that is, unless they've got those advisors and they've spoken to them early. And let's be honest, a lot of clients sometimes come up with these ideas on their own before they've spoken to the right people, and sort of looking to get involved in this kind of space before they've actually had the advice. So those things are really important. For the self-employed clients, which most people you're probably speaking to will be, they may not have been contributing the maximum amount in personal contributions from their business into super. That can be for various reasons. Sometimes it's because they're using that cash for other things, or they might have been using it personally to pay down mortgages outside of their business. Who knows? But the reality of it is, when it comes to buying a property through super, all of a sudden they think, damn, I've got to, maximize what I'm putting into super so I can actually afford this loan. Now, the reality of it is, if they haven't been doing that for the last couple of years, it creates a little bit more of a challenging application because you really need to justify why they will be able to contribute the maximum going forward. Once again, something we can help with. So our team's equipped to have these conversations with your clients and identify where there might be some challenges early on in the application process to be able to address them up front with the lender and give them a better chance of success.
That's spot on. All right, guys. So this has been a bit of a quick and short, to the point webinar. So we're just going to recap now. We're nearly at the end. So basically, SMSFs can borrow to buy property, but it will be restricted to commercial property as of the 10th of August of this year. That's not to say that commercial property is the only type of property that a super fund can buy, but if the super fund wants to buy a residential property post the 10th of August, it will have to be through its own means and can no longer borrow for it from lenders. So this space is quite regulated. So there are a lot of restrictions and a lot of black and white, but we, like Eamon said before, we know this space. We've been dealing in it for quite a long time now, and we know the lenders, and we are best placed to team up your clients with the right lender for their circumstances. So guys, if you haven't already, please check out the website, cluefinance.com.au. If you haven't registered as a Clue partner, it takes less than a minute, but you'll be able to track every single deal that you send through, every milestone and every deal. You'll be communicated with quite regularly about the deal and where it stands, as will your clients. So what's next? We've got specialised versus non-specialised property. In the next webinar, we'll be communicating that in the next week or so and locking in a date. Like I said before, if you haven't already, jump on our website. We've got a lot of insights there, and all the previous webinars are also hosted there. And more importantly, we've got the MFAA code there for you to take note of. Anyone who's watching this,
any questions we had on the chat there, so can't see any at the moment. Might give it a minute. If there is any questions you want to throw out, happy to cover them off now.
Yep.
If not, we'll obviously finish it up and look forward to seeing you in the next one.
And like I said, the MFAA code is right there. This will be posted on our website and on our YouTube channel. So If your teammates want to watch this, please feel free to direct them to it. The MFAA code will stay there at the end of the video. But otherwise, doesn't look like we've got any other questions.
No questions for this, so we must have covered it off.
Yep. Thank you, everyone, for joining us again, and we will wrap it up here. Have a good day.